All right, let's dive right into this explainer. Today we are unpacking the absolutely massive Q4 and FY26 performance of Pondy Oxides and Chemicals Limited, or POCL for short. This is a company that's fundamentally reimagining the industrial supply chain. I mean, they are literally taking what most of us just toss in the trash and turning it into unprecedented financial value.
Right off the bat, you have to look at this bold vision statement because it makes one thing perfectly clear. POCL is not your traditional chemicals or metals manufacturer. Actually, scratch that. They aren't traditional at all. They're built from the ground up on this massive sustainable ambition, and their entire identity is anchored in creating these infinite loops of value through recycling.
So here's our roadmap for today. First, we'll meet the urban miners. Then we'll look at a history of expansion, the 4 recycling verticals, the FY26 record financial performance, and finally, target 2030 and beyond.
Section 1. Meet the urban miners, extracting value from waste. Imagine, for a second, marching into a concrete jungle, but not to build anything. You're actually there to mine. That is the whole concept behind urban mining. Instead of digging deep into the Earth's crust to extract virgin ores and disrupting entire ecosystems in the process, they are extracting immense value from the discarded materials that are already sitting right there in our cities. To put that into perspective, for POCL, urban mining means rescuing and recycling over 140,000 metric tons of scrap every single year. Executed by a super dedicated workforce of over 500 employees, plus a sprawling network of about 200 worldwide partners, they are literally fueling a circular, sustainable industrial economy.
Section 2. A history of expansion, from 1995 to global operations.
Now, this kind of success definitely didn't happen overnight. Incorporated in Tamil Nadu way back in 1995, POCL spent years just steadily increasing their capacity. A massive milestone hit in 2018 when they became the very first Indian brand registered on the London Metal Exchange for 3N7 lead, which, by the way, is an ultra-pure 99.97% grade of lead. And that momentum just accelerated with their TKD expansion in 2021, culminating in a complete doubling of their copper capacity by 2026.
So, the real takeaway here is that this long, 30-plus-year track record is exactly what built the operational muscle needed to support their current footprint. Because achieving a status like a 4-star export house doesn't just happen by accident, right? It requires decades of refining your processes, mastering quality control, and building some serious global supply chain resilience.
Section 3. The 4 recycling verticals, building an infinite loop.
You really have to look at the sheer physical scale of this operation across their 4 distinct verticals. The lead capacity alone is staggering, at 204,000 metric tons a year, which primarily feeds battery OEMs. But they've diversified brilliantly. We're talking 12,000 metric tons of copper, another 12,000 of aluminum for autos and appliances, all alongside 9,000 metric tons of plastics recycling.
But you might be wondering, how exactly does a messy pile of scrap become a high-margin industrial product? Well, it's a super rigorous 4-step process. It kicks off with global procurement, followed closely by strict sorting and segregation based on intense quality control. Step 3 is processing, so smelting, refining, grinding. And finally, the real magic happens in Step 4, creating value-added products. Think specialized premium alloys and plastic granules that command absolutely top-tier market prices.
And what's really fascinating here is the direct, unbreakable link between the physical act of recycling on the one hand and this massive financial surge on the other. For POCL, sustainability isn't just some PR initiative or a CSR checkbox. It is quite literally the fundamental engine of their unprecedented financial growth.
Section 4. FY26 record financial performance, explosive growth.
Okay, let's talk numbers. Starting right at the top line, 45%. That is a staggering year-over-year jump in standalone revenue for FY26. We are talking about top-line revenue hitting a massive 29,387 million rupees. But you know, top-line growth doesn't mean much if it's not scaling efficiently, right? So enter this number, 103%. That is their year-over-year growth in EBITDA, reaching 2,181 million rupees. They essentially doubled their operating profitability in a single year. No small feat. And for the ultimate mic drop, the ultimate proof of a thriving business model, 113% jump in profit after tax, hitting 1,387 million rupees. This proves beyond a shadow of a doubt that POCL's revenue growth is translating directly and powerfully to their bottom line. Now, if you're sitting there wondering if FY26 was just some crazy one-off fluke, the historical data proves otherwise. If we look at their 5-year compound annual growth rate, basically their sustained average growth over half a decade, POCL has maintained incredible momentum. Revenue grew at 24%, EBITDA at an astonishing 52%, and profit after tax at 67%. This is systematic double-digit compounding across all major metrics year after year.
The secret sauce behind this profitability is essentially a dual-pronged strategy. In their mature lead segment, they intentionally prioritized higher-margin, value-added products, which resulted in a massive 43% increase in profit per ton. Conversely, in their emerging copper segment, they aggressively scaled volume, effectively doubling their capacity. So you have margin optimization on one side and aggressive volume scaling on the other. It's a perfectly balanced revenue attack.
Section 5. Target 2030 and beyond. The horizon of infinite opportunities.
Looking ahead, Managing Director Ashish Bansal has laid out a highly structured roadmap for the next 4 years. The targets are super precise, sustaining over 15% volume growth, delivering a 20% revenue CAGR, and keeping EBITDA margins solidly above 8%. They also plan to keep return on capital employed above 20%, which proves they're highly efficient with their cash. And most importantly, they're aiming to push those highly profitable value-added products to over 60% of their entire portfolio.
It's essential to step back for a second and remember why all this actually matters. The incredible financial metrics we've just reviewed are inextricably linked to reducing global waste. Every single metric ton of capacity expansion for POCL means less scrap sitting in landfills and less virgin mining required to build the sustainable cities of tomorrow. Which leaves us with this final, pretty massive question to ponder. As urban mining continues to prove that turning global waste into unprecedented profit is not only possible but highly scalable, how is the concept of infinite recycling going to reshape the entire future of industrial growth? Because as we've seen today, sustainability and massive profitability are clearly no longer mutually exclusive. Thanks so much for joining me for this explainer. I really hope this helped you understand the fascinating mechanics behind the urban miners.